Good morning, everyone. All right, let's get going here. So, first time in quite a long time, right? These internals are together. So this one here just kind of peekabooed above that line. This was together, was coming out of a base. You take those kind of like, it was kind of grinding up there, coming out of a base like that. But here, this has been going up for a while and consolidating. The most potent ones, obviously, are when you get a secondary run. And this isn't to say this run is over. Gapping up yesterday, it didn't go very far. It was ahead of, a big whole number there. I mentioned about the open interest in some options and just kind of held it there. You see prices went nowhere. So we'll see where today goes. Assuming maybe it continues to go higher. This may move further into these bands on the sentiment side. By tomorrow, we'll see. Breath is up here close to plus 200. I like the fact that it's gotten higher than it was before. And none of this is to suggest, hey, run for the hills, the market's going to crash or any of that kind of stuff. Not at all. But short-term risk begins to increase, and we want to know, hey, as the prices go up, is risk a little bit more than it was, say, a week ago or a month ago? And so that is what this is telling us. We see the volatility index is down here, still within its base. It broke out. And one of the things that I mentioned when this came back in again, whether we're looking at the volatility index or ETF XYZ, something that's been basing and it makes a move out of the base, the majority of times it comes back in again. And usually they make even bigger moves than this. This was one day and it gave it back up. So sometimes you get impressive moves out of a consolidation and they come back to the base. So having the volatility index down at this level, which has been stable at, over the last month or two, and sentiment and breadth moving up to an extreme, probably in the next week or so, we're going to see a little bit more selling pressure, and we'll see how that goes. The good thing is that, we've got this pivot here. We've got a pivot here. We've got some nice support. Doesn't mean it can't go through it, but it's better than these things lining up and you've got a climactic sell setup. There's a whole bunch of room to fall before reaching any support. This is more, I guess, indicative of, hey, things are probably going to get more choppy. 13-week treasury, it backed off a little bit. I was surprised to see the reaction in the dollar coming down as much as it did. It's now coming to support. If you go look at the CME Fed Watch, it's still 92% that they're going to raise interest rates. But I guess it starts going more toward, after the numbers yesterday, they're closer to the end than how many more times are they going to do it. So, this is not intraday, but, something that comes down like this, Alex, we've seen it tons and tons of times, a greater than 100% retracement, it flips back up again. So, and as much as this has moved down, gold hasn't moved up that much. Silver has. We'll take a look at that. But nonetheless, this had the potential to move higher, and it's collapsed back down on this news because, in large part, the belief is the Fed is not going to raise interest rates as aggressively as it was perceived that they would have, and all the hawkish statements that they've been saying. So, but more data will be coming. And so as things, when information comes out that maybe supports more that the economy is slowing down, people are hurting, who is now, jobless claims, and all of that, it becomes more and more evident that all of these rate increases are having the desired effect, which is to put pain on not the economy, to put pain on you and me. And one of those numbers where they talk about inflation and core inflation. It's like, so they have these numbers that they can massage, right? It's like, okay, but this one that looks so great, but that one doesn't take into consideration energy and food. Now, I don't know about any of you, but I don't see food prices coming down. And who isn't buying food? Maybe people are buying hamburger versus filet mignon, or buying some more rice, or I don't know what, but that isn't coming down yet. And it'll be interesting to see, is that going to start coming down? Miami and Tampa have the highest inflation in the country. That's interesting. I'm interested to know why. Maybe because we have a governor that did things differently than other states, and people are in better financial shape. So they're still buying. If people stop buying, the suppliers are going to drop their price to sell more. I mean, one of the things that I've noticed, because I buy a lot of stuff from Amazon, most of us do. And no matter what you see, 15% off, 30% off, 50% off, all of these sellers are dropping prices. So as a very broad measure to see what's going on out there, are people feeling this? And that's what I see. I see on Amazon so many things that, have come down a lot in price. What is percentage wise? Or they're just like, hey, 30 bucks off or whatever. That's the whole idea, to bring down inflation in some way. So oil is broken out here above the highs. So saying, that inflation number is all well, this one gets figured in next time, that might not look so good if this continues to go higher. The next resistance point is up here now that it's broken out. Surprisingly, these junk bonds that looked like they was going to make a dive, so the bearish case, but it flipped back up again. Interest rates here that were up here, they flipped back down. I want to see what they do here. What, this congestion, whether the 10-year begins to flip back up again. So a lot of things to keep an eye on. At the moment, the breadth reaching an extreme together with sentiment, keep it in the back of the mind, as long as we have good patterns that look like things could work out. But if you start seeing all of a sudden some of your stops getting hit with some erratic price action, you're saying, oh, okay, I get it. Things are really starting to take hold here. So we'll see how it goes. All right, where the markets are at, they're gapping up a little bit here. You can see spiders are gapping just above the high of yesterday's bar. So there was a gap and it hit the wall. And it just slammed into that wall. Yesterday I told you about this open interest in spiders of calls there that tends to act like a barrier. And it did. Things just chopped around. It gapped up, but it didn't come down and fill the gap. And it didn't come down into these highs. So it held up real well, considering the gap up. And, it gapped up and came in again. Couldn't get up there to 450, but that could be where it's headed. So far things are consolidating, and you see the gap up here a little bit. So we've got this little congestion area, and so maybe things start moving up above this level, and that would, the next whole number there would be an obvious level to keep an eye on, where prices would stall. And I want to look at these futures. You can see they're up just within the top of yesterday's range. Really not much going on. Let's drag this up. When this bar is done, assuming it's not all the way down below this low, this will be marked as a new pivot low, and that'll be our new reference point of major support. So this is coming closer to this pivot high. Isn't quite there yet. Benefit of the doubt, unless it breaks a prior day's low, the benefit of the doubt is that it'll keep going up there. So at the end of the day, and then we're talking tomorrow morning, we'll assess how far did this get toward its destination, or did sellers come in and how deep did they close this into a prior bar's range or low? Right now, things look higher. Whatever they're up here, they're just chopping around sideways, and just sloppy price action for the moment. All right, SPX. Right. As we thought yesterday, didn't get very far. It was a choppy day, didn't do much of anything, and the 4,500 will be a stopping point. Whole numbers typically are. And Jake, why don't you have a high number? He's got same as me, 44, 45 down below. So it would have to break yesterday's low. It's got this level of support here. Now, unless some terrible news was going to come out and the early morning news is already over, this should hold. And 45 and a quarter, even if it gets to 4,500, if it can consolidate there and keep going up, it isn't going to get there in the morning. That, my belief, we know anything's possible. My belief is it is going to get there in the morning. So by the time you get into lunchtime, most of the time the premiums are, pretty much wiped out. Unless I read something wrong here, 45, 25 chase is where there was some call premium. It's 50 cents by 60 cents right now. So part of my thinking, 45.20 is 90 by $1.05. So if the market at the open pushes higher toward 45.50 or 4,500, the premium here will get jacked up. Yes, it would make sense that there would be a lot of liquidity there. So going to be more difficult to get through it. If it consolidates there for a while, one of the things we'll be looking for, the typical pattern, say it goes sideways there for 20 minutes or whatever, and then starts to break out, we'll have to go with that. We can buy futures and see, and we get a run. Okay. Q's underperforming. The gapped up didn't go anywhere. Things are consolidating. The gapping up a little bit here above these highs. So that's a positive. It's gotten above this resistance. That high is still up there. That destination. Things have been chopping around for a long time, as you can see. Yesterday was a go nowhere day. Transports still look good. They did have a kind of a gap and crap a bit there, but it's still a bullish chart. Nice momentum. Slowed down a little bit. We got the red bar. Look at the distance between the moving averages. Things are becoming extended in the short term. Still a positive the way it's moving, but as prices get extended, internals reach an extreme, the probability of an increase in selling happens. So a little caution. Things are still looking good. The Russell moved up yesterday, didn't go very far. It's got a little bit of room before I could get to 200. Doesn't mean it has to get there, but it has that room. So I'm going to bring the alert up here, since yesterday was a gap up, to see if it actually comes down in there. McGraw sharing with us here in the green room, a lot of puts and calls came in at 44.75 yesterday for Friday expiration. Well, let's take a look at that. I see the big open interest in both are still down at 4,400. So 44.75. Interesting. So what do you make out of that, McGraw? I mean, 44.75 for Friday's expiration. Let me take a look at that. Let's see how much. 44.75, 11,000. 44.75. Not much on the put side. Well, on the call side. Oh, 4,500 expiring tomorrow is big, right? 4,475 is almost the same amount. So that'll be a battleground there, right? To keep an eye on. And basically from a different point of view, what I was saying is that, so let me explain for those that aren't familiar with how this kind of works. And McGraw is our resident SPX options expert. But one of the things that, as he started pointing these things out to me, that I noticed, because you tell me one thing about something else other than price action, and I'm always going to relate it to price action. And one of the things that I found was, say, this 4475 area has got this big call open interest there, or 4,500. What typically happens is it starts chopping sideways. And you start getting this indecisions, and it's like, okay, who's going to blink? And if it can take this out, that's where the run starts. So it's a great piece of information to be aware of these large open interest areas like that. And I originally, I didn't see this happen in the S&P 500, the SPX, wanting to see something in a universal way. I mean, it should be universal if it's the truth. It shouldn't be just one instrument. I actually saw it happen on Tesla, which had this big open interest. And it's like, wow. I saw the pattern shape up, a little sideways. It was a little rounding. It had the void, and it just exploded. So it, kind of built my confidence in the mythology of being aware of large open interest levels in very liquid indices and stocks, and the effect that they could have because of the mechanics of how it works. So very interesting. Good information. All right, let's get through this. We already looked at Qs, kind of breaking out of a range here. Relatively tight consolidation. Is that resistance there? Looks good. We know that other tech is underperforming. Got the S&Ps here, not S&P semis gapping up a little bit, but in the trading range. So some tech underperforming. Those interest rates coming down have helped. Bitcoin is doing nothing. It's slopping back and forth. We already looked at crude oil going up here. Looks like it could probably reach the 200 MA. So oil stocks have been doing good. And can you put a large open interest area on a chart automatically? Not on my charts, Alex, but I mean, all you need to do is to say, hey, if you go and look at the option chain, but this is expiring out 64 days from now. 4,400 has got a relatively large open interest at that level. So just being aware of that, you could put a horizontal line on a level like that and just set an alert. But what's expiring today and tomorrow is more relevant than that. And 4,400 is kind of far away. But gold popped up with the dollar getting whacked, on that news. It came down here. It's down here on support. I suspect it's going to stabilize. And the Dow is in a trading range. So still just doing the Christmas tree dance, green, red, green, red, green, see what's going to go on there. So there you have it. I think there is that potential to move higher today and maybe even into the end of the week, and then we'll see where it goes from there. Well, you're at 10.
Good morning. So the FANGs are having another party day here, pre-market. NASDAQ up much more than the others. And we said last night over the high, it looks fantastic. Bullish consolidation and a strong uptrend. And bullish pre-market, bobble around a little bit on the PPI numbers, but pretty much a yawner for the news. Earnings season starting here. CAG. Doing nothing here. Opening up a little bit. Potential double bottom on the daily here, but it's a double bottom in a downtrend and not a great void. I mean, it does have a void here, so it could possibly be, yesterday's MT live was great as always, talking about assessing the potency of support, resistance, voids. So this does have a void here, but then I think you're going to hit a brick wall right there. Now compare that to this AMD double bottom. This one also has a bigger void, but it's on the 50. It's on an uptrend. So this one is superior to trade than that CAG. Big open interest, 380. Yeah, I mean that's $4.50 away, but yeah, daily, weekly, monthly look higher here. As Greg said, the internals, but doesn't mean we can't rally for 1, 2, 3 days and get them even more cooked. And it could correspond with some bank earnings. I mean, it's going to be real interesting to see what they disclose here in terms of losses, and everyone's still concerned about real estate. That Stephanie Pomboy was on Fox Biz today. I mean, I respect her a lot. Met her in Texas. But when people come on, I mean, she's like a penultimate bear. And you can have a view, that's fine, but you can't argue with bullish price action. I mean, look at this breakout here, consolidation, breakout. I mean, you could, that bearish view can take you to the poorhouse. All right, shoot, I just wrote over something there. I don't know what it was. Delta, I mean, these airlines, all the airlines and the cruise ships and some hotels just ripped on this breakout. I sure wish we gave some core longs on airlines. Gapping up to 50. Yeah, I mean, things that have runs like this into earnings as far 20 from 50, just my default is 30-minute low, sell a call spread. That kind of looks like a short-term exhaustion gap. Pepsi 187. There you go. That's not a bad, that's a nice gapper. Let me put it there. Pepsi, sloppy as can be, but as long as it holds, I'll just eyeball, let's call it 186. As long as it holds 186, that looks like a fantastic put spread candidate. AMD alarm just went off. I posted that as a put spread. It's a directional I watch also, but I just want to watch it for the morning session. Workhorse here alarm just went off. Roger and I actually shorted $1 puts on this thing 2 days ago. All right, so that's that. Fast. Earnings gapping down 57. That's a call spread idea. PGR getting whacked 125. Let's see what it does, but that's a big old gap. Another call spread idea. Amazon. Yeah, I mean, there's a number of these things that look like longs. Look at Netflix. Looks fantastic as a long here. So let's let it trade for 15 minutes or so and look to buy call options on this. But as a new trade, that looks great. Remember Meta We were talking about the breakout over here, this green bar. I think there started to be excitement about their new threads thing. And I don't know what's causing the gap today, but closing breakout yesterday, amazing strength. Look at that. When you see a trend like that and you can't even see the 200, that by definition is telling you that the longer time frames are extended, because I would have to blow up my chart here to see the 200. Milking gapping down, no pattern. VSATs. This was not earnings, but obviously there was some news. This is a satellite company. That is some nasty news on VSAT. Wow, that is a big gap. So I'm going to put that in a window, my other computer, just in the excessive gap department. Watch. NTNX, we bought calls on the pullback yesterday, and getting a gap up here. My Intuit alarm went off. We are core long this. Look at daily, weekly, monthly, all in beautiful alignment. Gapping up here, 481. This recent IPO gapping down. Yeah, I like IPOs, but I just need a pattern. So PGR, okay, I guess that was earnings. Disney was on CNBC, Iger. This was actually a setup where you accuse spiders breaking out right now into the open. If this broke down, it would have been a short, but now that it's stabilizing here, a major support. This is a put spread idea. And I think I heard Iger saying they were wanting to try to increase their share of CMCSA, but it's a breakout daily, weekly, monthly. So, I don't care the reason of the news that brings me to a chart of interest, but that's a nice big, you can kind of call that a big ascending triangle. Closing breakout yesterday. I just saw this little thing going by the ticker JZHM. Capping up to $5 though. Nothing to do with that. All right, so I see Pepsi there. I just went through my 186 number that I kind of wanted it to hold. Big C. Nice bottoming pattern, closing breakout on the weekly. Down from 160 bucks. So that's nothing to do here, but it's a watch on a pullback. Rambus, I had an alarm up here, just went off. I'll just set a new alarm. SWKS is triggering. Let's set an alarm 6250. All right, so we're looking at pre-market data. We got a little breakout failure on Spider's Q's, so we're in no hurry. See Delta here. I mean, it's not a textbook novice gap just because it's gapping from this consolidation, but it's just the fact that you're gapping on earnings and you've already rallied from 36 bucks is why I was inclined for a call spread. SWKS, yeah. Here, I'll give SWKS. So this is on the long, and we also have a put spread idea. Let me see where the juice is on that. Alex Tyson from yesterday you were looking at. I see that moving up a little. Yeah, they suck the juice out of SWKS, so we're not gonna get filled right now. Tyson, maybe 30-minute high, let it bobble around a little bit. Shop. Bullish, just, figure out what time frame you're trading.